You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
Well, an interesting headline you suggested for us. Trading gold and silver is kind of like fighting Ebola. What's the connection?
Well, I think the connection is an emotional one and also a practical one. How people deal with any kind of a disaster or a potential problem that doesn't present itself with a solution right away. The old idea of survivor versus a victim. Survivors focus on how they can respond, and victims focus on the problem that they're in and become more and more emotionally unbalanced. And I was listening to a very interesting YouTube webcast, actually not a webcast, but a kind of a YouTube video that was shot in Liberia last week, dealing with the situation there. And this Western journalist very bravely went around talking to people, and I was struck by the way in which these people were putting themselves at risk to help their fellow countrymen. And these were everyone from driving people to that were infected to a clinic, to burying the dead, to trying to come up with solutions. And the person that really just amazed me was a man named Dr. Mohammed Sango, who was the medical director at a place called the Redemption Hospital in Liberia. And this had been a free clinic where people would just come there. There weren't any medical facilities. And when this tsunami of Ebola victims hit the country, people started coming there and they had no treatment. And he turned it into a treatment center as best he could with very little medical supplies. And he talked in the interview about coping emotion. When they asked him, he said, how do you keep from becoming, terrified? And he said, I have to cope. I have to cope with the stress. I have to cope with the emotion. If not, I will be a victim of circumstances. And I think this is exactly what we're dealing with in the mining stock portfolio now, in gold and silver and platinum and palladium for investors, because we've had this grind going on so long. And then now with all this other stuff coming in, it seems like overwhelming. And people either get frozen on the spot, or they sell their stocks good and bad at a loss, or they don't know what to do. And I think if they ask themselves how they can respond, and they think about what this doctor did under these terrible circumstances, I think they can put themselves in a place not only to survive, but when the market turns, as it gives evidence that it's doing now, of thriving and being at the winner's table.
I also saw a thing on business television where one analyst suggested that you should sell your oil stocks right now and start picking up gold equities, especially underpriced juniors, because he says if one of them makes a major find, they're going to be supported by a major company right away. So, but again, he said you have to do your research to make sure you're getting the right ones.
Well, I agree with him on that, and people may or may not have oil stocks, but whether they do or not, I think they should be doing the research on the gold miners and the silver miners and picking the best of the best. And that's one of the things, Jim, I think is going to be a shock to a lot of people, is when the market turns and we get a sustained uptrend, there are going to be much less choices to choose from than there were a couple of years ago, because a lot of the deadwood's going to be blown away or be obviously have no future. And so if you can find the best, and it gets easier and easier because the choices are more limited, and if you just get a few of those really good ones and hang on, and if you're able to buy scale down if you're not fully committed, and if you reassess what's going on with your choices, I think you're going to be very happy in the next year or so when things really get turned around.
Yes, he suggested as well that this is a long-term investment, not something that you hope is going to pop up in a week or two.
That's correct. That's another thing, and it's really hard, those of us who've been waiting with some of our positions for almost 4 years now, that we think, oh, no, we have to wait still longer. But Mr. Market makes a decision, and we have to kind of go along with what he presents with us. And I feel that in my case, everybody has to make their choice. But I think for me, even though it can be disheartening at times, I think if I focus on how I can respond, I think that I'll be happy that I did, and it'll be worth the effort. And once things turn around, you forget the pain of right now pretty quickly.
China's still snapping up every piece of physical gold they can lay their hands on. They've been gold bugs now for how long? 10 years?
Well, quite a long time, and indications are by Koos Jensen and others that they purchased most of the available gold supply last year that was out for that year. Wouldn't be surprised if their purchases are down this year, but the point is they are continue to be important players in the market, and the same with India as well too. So this is still going to be an ongoing thing, and as we see more and more issues coming up with regulations of new mines and things like this, there's some very serious issues going on in Peru now, for example, that could have real negative impact on future mining operations there because of the political scene. So more and more, I think the issues of politics and political issues are going to constrain the production of the metals, not to mention that right now most of the producers are at or below cost of production, and that has very dire circumstances for the longer range and even the intermediate term in terms of being able to ramp up production if prices start moving up and demand continues to rise.
We'll have more with David Smith right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with David Smith, senior analyst for the Morgan Report. David, you were saying last week gold stocks hit a key reversal. Maybe tell us what a key reversal is and why it's so important.
Well, Jim, this is a very fascinating topic, and like any other chart pattern or perceived chart indicator, it has to be followed by action which supports that. And sometimes we think we see something, and then a few days or a few weeks later, we don't. But I saw something very interesting last week on a number of the stocks that I follow, and I'm sure there were scores more that other people follow in this sector that did the same thing. And after a period, in this case, of sustained decline, when you have a day or a week where prices trade above and below the preceding day or week, and then they close above that preceding day or week, that's called a key reversal. And so when you look at that, I found many of these doing that last week, where they had a very large range day and closed high on the day, sometimes at the very top. And I looked at small, medium, and large producers, and all of them displayed the same type of a pattern. In addition, many but not all did so on very high volume, which is positive, and also the MACD indicator, which indicates the variance that's going on, was on an upward direction. And so I looked at that, and then I also asked myself, what does a person do if they didn't get the position they wanted at the lows, or they didn't get enough? Well, rather than going out the very next day and buying the top of the next rung, what often happens, and what has happened over the last week, is that you'll get a decline of around 50 or 60% of that line that had been created. And if you want to add more to your position, you buy into that decline. You kind of wait for it to go down anywhere from 50 to 60%. And then you hold on, and you can put your stop below the bottom of that key reversal day in case it turns out to be a false pattern. And so far, over the last week, what we've seen is this pattern has held. I've looked at most of the stocks that I follow, and we saw declines of about 50%, and a person could have added into that, and they're now trading still below the top of that key reversal day, but well within that envelope. And we'll see what the future holds, but for now, it looks very positive, and I think it bears watching.
And David, any final thoughts here on people who are wondering when are things going to turn around?
Well, nobody can predict that future, but I really feel that we're in a process where things are turning around, and it's so easy to think that you can, I'll just do this when it really becomes obvious. But by definition, when it becomes obvious to you and me, the market has already discounted most of that. And so I think people have to be willing to take the risk. If they're don't want to do it, that's their business. But I think if they want to have the potential profits, they have to take some risk. And, Jim, getting back to what we talked about earlier here today about the idea of comparing how people respond to Ebola with the market conditions, I think there's a lot to recommend that analogy. And the doctor that I quoted here in the video, Dr. Sango, said this, and I think if people listen to this paragraph, they might agree with me that it is a direct correlation to the markets that we're dealing with. He said, if you think so much about the disease and become frightened, what you're supposed to do to protect yourself, you cannot do it. You will not think. When the fear consumes you, then the disease equally consumes you. So you have to be alert at all times, no sleeping on the disease, no sleeping on your emotions. And, something tells me that Dr. Sago would be a very good trader in our markets today, in addition to the tremendous and valiant work he's doing in Liberia against the Ebola disease.
David, thanks a lot for chatting with us.
You bet, Jim. And if anyone wants to see that video, I really highly recommend it. It's worth their 30 minutes, and it's called The Fight Against Ebola, and I think you'll be able to find it on YouTube. So thanks a lot for your time today, Jim, and I wish all of our listeners the very, very best.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. We're also up on YouTube. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.